It's 6 o'clock in London, it's 1 p.m. in New York, it's 1 a.m. in Hong Kong, 3 a.m. in Sydney, 10 a.m. in San Francisco, and 10:30 at night in Mumbai. Greetings, good morning, good afternoon, and good evening, depending on where you are in the world. And in fact, this week, thanks to the United States going to daylight saving time, probably all the previous timings were wrong. However, this is the start of the show. My name is Patrick L. Young, the IPO-VID livestream, Series 17, Episode 2, which gives us the aggregate of Episode 98 starts here. Congratulations to ErisX on their $7.2 million strategic investment round affiliated with companies that trade the Eris software. Meanwhile, in the biggest news of the week, it's been, well, bank runs are in the Sesame Street school sponsored by the letter S. First we had Silvergate, then Silicon Valley, then Signature Bank. And isn't it indeed a joy, ladies and gentlemen, to see a really old-fashioned classic liquidity mismatch with a bank run dressed up as a digital meltdown. Hopefully the rest of the banking system is going to be okay, as I do believe it will be, although a lot of people are going to be somewhat nervous about bonds they have to hold all the way to maturity in the near future. That's not the topic for conversation today. Rather, we are discussing ICE, the Intercontinental Exchange, cresting the derivatives wave with a brilliant guest, Jennifer Ilkiw. Jennifer Ilkiw is president of ICE Futures US, having previously served as ICE's head of Asia Pacific, where she was instrumental in the 2014 acquisition of the Singapore Mercantile Exchange and the subsequent development of ICE's first exchange and clearinghouse in the region. Prior to joining ICE in 2007, Jennifer Ilkiw opened and managed the Asia Pacific office of NYMEX. Jennifer, welcome to the show. It's lovely to have you here.
Thank
now,
you.
Traditionally at this point in time, we would say, where in the world are you today? So where are you?
Boca Raton at a phenomenal resort with you, waiting for the FIA Boca conference to start, which starts tomorrow.
And you know, it's very interesting. We're all talking about liquidity mismatches and the hangover from quantitative easing. Yeah. And actually the winner, I've come to the conclusion, out of quantitative easing was the Boca Raton Resort and Club, because it spent the 1980s and 1990s, ladies and gentlemen, mostly in and out of Chapter 11. I mean, it was like alongside the US airline industry, always going bankrupt every few years. It was perennially looking underdeveloped. And then what we got was this amazing situation, thanks to QE, where suddenly they could afford to actually renovate, rebuild. We're here in the Yacht Club, which is absolutely magnificent. There are beautiful yachts behind, absolutely none of which belong to me. Presumably a couple of them probably belong to Jennifer. But at the same time, it is interesting to think about this, just when we're talking about all those banks sponsored by the letter S and saying how terrible it is, this QE thing. And certainly it has been a bit of a mess in the aftermath and the hangover stage. But we get to enjoy incredible resorts. At the same time, it's a bit of a rough thing because you have to say, I mean, the inflation rate that seems to assess the Boca Raton Resort, it's somewhere around Zimbabwe, I think. It's hyperinflation. Yes, the prices are incredible. I think they have like a big dice game at the end of every year, and they suddenly throw dice around. They just
decide how much that hamburger is going to cost.
Yes, exactly. Yes, absolutely.
Yeah.
I remember a comedian here 20 years ago saying that when he got his muffin for breakfast and it cost him $15, and that was in the late 1990s, he said, "Can I have a straw with it?" And they said, "Why is that?" And he said, "Well, because there must be cocaine in it." And I think that is one thing that's quite interesting. Anyway, here we are, thanks to QE, the Boca Raton Resort and Clubs never looked better, ladies and gentlemen, which is fabulous. So, Jennifer, tell us a bit about your background. How did you manage to get into the financial business?
So interesting story. So my father, I guess, was one who got me into this. When I was younger, about age 16, 17, he started to have me meet with different women in the financial markets. He was he worked at the Canada Pension Plan Investment Board in risk, and he introduced me to a bunch of women. I would go for lunches with them. They would talk about their job. I understood maybe 10 or 15% probably of what they were saying, but I knew that when I was there, I wanted to be just like them. So I ended up going to university, did an economics degree, worked in the government in Ontario under auto insurance policy, which has nothing to do with what I do now, for a couple of years. And then went and got my master's. And I had also done a bit of traveling, and part of my traveling took me to Singapore.
Okay.
And when I got to Singapore traveling, I thought, this is where I want to live.
Okay.
So when I was doing my master's, I had a chance of doing an exchange program. and I took the exchange program. I had Singapore or Hong Kong were my choices in Asia. And I was doing my degree in Toronto, and it was winter, so it was like negative 20 degrees Celsius. Singapore would have been about plus 30 degrees Celsius, and Hong Kong was about 14 degrees Celsius. So when I took all those, I decided that Singapore was warm, and I would choose Singapore. And then I just really didn't leave. And that was kind of it. I went for the program, and then I didn't leave. I had finished in May. I had gone back to Canada for 2 months and then moved over with my then husband, and he was a teacher, and started looking for a job.
Oh, wow.
Yeah.
And how did the job search go? What did you end up doing?
It was a long job search. It took about 4 or 5 months for my first job. I was going to and from Malaysia every 2 weeks to make sure I could get a visa to stay in Singapore because I had no other visa. And then the first job I got was with the MAS, the Singapore government.
Wow, the Monetary Authority of Singapore?
Yeah.
What did you do there?
Singapore had something called the Financial Women's Association of Singapore, so I joined them. They had introduced me to the MAS. I got into for the interview, and then I remember getting on the bus to go home, and they called me for the second interview. I'd gone in 2 days later, and they hired me in their development department. So at the time it was called the Financial Center Development Department, and I was helping to develop Singapore as a commodity derivatives trading hub.
Wow.
So it was just trying to get people and traders to move from Australia, Hong Kong, or anywhere else, and to set up their commodity trading operations in Singapore versus elsewhere. And they believe that as long as you had sort of the physical, so you had the any of the refineries, any of the tanking, any of that was there, and then you started to have the people there, it would make it sticky, and you would be able to develop the commodity markets in Singapore, which is really what it was. So I started that. It was great.
So when was that?
That was 2004 to about 2006.
Okay.
And then I had met the guys from the NYMEX, Tom McMahon, who had become my mentor for a number of years. And yeah, we all know Tom in the market.
Absolutely.
And I ended up joining the NYMEX, and I was their first employee in Singapore. Great. And I had to go buy my own laptop. I had to get my own service office. It was a whole new experience. It was like being an entrepreneur with somebody else's money.
Right. Well, that's really interesting. And of course, Tom McMahon, who nowadays with Air Carbon Exchange, was actually an alumni as well of the IPO-VID series. And we're going to be seeing him somewhere around here. I just have to mention, by the way, because my producer is telling me that I should say that this has been pre-recorded, ladies and gentlemen, because we've got a frantic schedule ahead. And in order to secure the opportunity to have this chat with Jennifer, it was important for us to pre-record. So we're not actually running live on the live stream this week, which is one of those issues. So Jennifer, very interesting. So you go to NYMEX. Now, you've already therefore clearly you know one end of a bunker from another, and you can tell all of these sorts of things. So it takes two to contango, as the old saying goes. You work for NYMEX, and how does that go?
Yeah, so NYMEX, and it was fantastic. It was an interesting experience, but at the same time, they were looking to be sold to CME at that point. So there was a lot going on, and ICE had approached me, and it was a different experience with ICE. They had a very good opportunity. It was a very small company. There were about 300 people at the time. There were 3 people in Singapore, and NYMEX was still a little bit up in the air about where they wanted to go and to be sold by CME. So I ended up taking, jumping ship and going to ICE. And to be honest, it was the best decision I ever made. I think culture-wise, people-wise, it is one of the best companies to work for.
It is, as you said, the one thing that strikes me always about Intercontinental Exchange is the quality of execution. I mean, if you look at a lot of it, and I'm not specifically mentioning, I'm not going to refer to your previous employers here, but if you look at a lot of the legacy seat-driven exchanges that demutualize, they quite often have a lot of internal politics, and it can be quite difficult. Whereas I don't know what goes on behind closed doors at Intercontinental Exchange, away days, retreats, whatever you do. But the one thing I notice is when you come with a decision, everybody is behind it.
Yeah, and things move fast. And certainly in the beginning, when I was there, when there were 300 people, everything moves at warp speed. So that it was an amazing experience starting with the company, and I've just never left, and I'll probably retire with the company.
Wow,
it's great.
Well,
that's
very
company.
Exciting to have that to look forward to.
They bring me out whenever HR has to convince somebody to come and work for them.
Well, there you go.
There we go. I'm the one that comes out and tells you how much I like the company.
To market to people. Okay, so you get to Singapore. Now, I mean, obviously, ICE in Singapore in the early stages, very heavily commodity-driven business, because
Yep.
at that stage you owned the International Petroleum
Yep.
Exchange, as it was, which had been
Yep.
one of the early acquisitions by Jeff Sprecher. You're developing the commodity business. But then all of a sudden, there's a crisis in India, and rather like the butterfly effect,
Yep.
this crisis in India, the National Spot Exchange, drives the opportunity to acquire a Singapore exchange.
Yeah, Singapore Mercantile Exchange. So that happened, when was that? That was about 2013, I think it was. Yeah, if I've got it right. I remember I was very pregnant with my second daughter when we closed
Okay.
that deal, so I can
Wow.
remember the dates around that. And that was, it was almost a culmination, because we had spent when I first joined, a big part of it was moving people from our other competitor, from NYMEX, and getting them to trade on ICE.
Okay.
And so that was really pushing a lot into our oil markets, Dubai, fuel oil, and driving that volume. And that was an incredible experience to be able to sit down with the oil traders, understand what they were doing, and getting them encouraging over. And then it was almost the next step was buying this exchange.
Okay.
And to walk into sort of a completely different company, work with them, understand what they were doing, and take this sort of rule book and basically break down the rule book and start again, break down the exchange and start again, work with the MAS, work with a colleague, Lucas Schmedes, who's over at ICE Index now. And we got along phenomenally. And it was, again, almost entrepreneurial again, with somebody else's money. But it's starting something new, something different, trying to drive people's interest in new contracts, in a new exchange. It's a huge amount of sales, but it was really fun and a really interesting time.
Well, it's interesting because, I mean, the original Jignesh Shah owned SMX. I mean, it was a fascinating business, but it really had a very Indian-centric business overseas model.
Yes.
So you came in with a completely different model.
Yeah.
Changed all the dynamics really to that business.
Yeah, so we did change. And ICE always looked at trying to find an exchange to make it work for the region as well. And it was trying to find something that would work for the region, that people wanted, finding products that were focused on the region, getting clearing members focused on the region. So even now, Maria, who runs it, Maria Levanti, we've got clearing members like Phillips Futures and KGI that are very much Asian focused, that are helping to drive that business for her, trying to develop it. So yeah, it was really exciting to be part of that and to help grow it.
And what was it like? I mean, suddenly, therefore, you were running an exchange and a clearinghouse in your own right.
Together.
You're in your own time zone, so you're somewhat isolated from the mother node in Atlanta. You're even somewhat isolated from London.
I think in Asia, you're always isolated. I don't think it matters whether you're running the exchange or anything else. I think there's fantastic things about working overseas, and for like an Asian operation like that is that you end up doing everything. So one of the things that we always found, we were doing everything from, I was buying milk for the pantry, and and these are the things you have to do. You just have to make sure everything's stocked up. We were making sure we had an auntie or somebody who would come in and clean. And I remember one of the first, when we bought SMX, it was quite different because there's new people coming in that weren't used to that dynamic. And one of the guys said, well, I need some pens and papers and stuff. And I said, oh, well, there's a stationery shop. You go down over here and you go into that mall and you just get what you want and you expense what you need. And it was just sort of horrified look on their face. But it was, in a way, it was so entrepreneurial. But that's what you need. You need somebody who's going to be ready to roll up their sleeves and do anything. And everything from getting milk all the way to sitting there with the regulators and writing a new rule book.
I'm reminded of an instance, and I will anonymize it, but at an institution, let's put it that way, that deals with the exchange business, and they took on an executive who previously had a vast private office in one of the more bureaucratic Asian exchanges. And he was horrified. He got to this new organization, and he spluttered one evening in a bar. They make you do your own PowerPoints. And I thought that was a great moment. It's like a sort of let them eat cake moment when you understand, like, no, in the real world, dude, you don't have an office for 12 people who on your every whim.
And not doing everything for you.
Make your own coffee.
Exactly. Make your own coffee. Get your own milk. Sometimes there just isn't milk in the fridge, so you go down to the 7-Eleven and you buy some milk, and you get it for the whole office. That's just how it works. So it was a great experience. And Lucas, who did the president and COO of the exchange, it was a really good experience working for him, and helping to try to develop that market, meet with new people, go all over Asia to be able to speak with people and understand what was happening in Thailand, what's happening in Korea, how we interact with people in Taiwan, Thailand, Malaysia. It was really good. And also working with the different regulators, because every regulator there is slightly different. Slightly different, building those relationships that we still hold now. So we've been very lucky.
So you had this incredible decade of effectively running SMX, what became ICE Singapore. You were with the organization from before that. You came out of, and I see my production team is offering the great comment here that you came out of your isolation.
Oh like
gosh,
that.
we haven't had
that's really
that's a new ICE panel,
that.
actually. We haven't had that one before. That's very, very good. Well done. So you came out of this, isolation, suddenly got vaulted into this very exciting different role. How did that come around?
So Jeff rang me, I guess it's just over a year ago now. And he called and he said, Jen, do you want to be president of? And I said, yes. I didn't know what I was going to be president of. So it really could have been just about anything.
Full marks for enthusiasm.
Yes. So I think as he was saying US, I was saying yes at the same time. So, and he said, it's a promotion. I said, I got that. I get that. And it was, I think when I joined the NYMEX and then joined ICE, it's one of those moments where you sort of sit there and think you've always wanted to be president of one of the exchanges.
Right.
And all of a sudden it happens. So it's a little bit of a surreal moment.
Right.
And it's been an incredible experience so far. The people I work with are fantastic. And I've been lucky that I've worked with a lot of them for many, many years anyway. But also just getting to know the products that I run, from our gas markets, Henry Hub, through our environmental markets, through our softs markets, the equity derivatives, in more depth than I ever needed to before. So in Asia, we were selling the products, but it was usually at a much higher level. So if somebody needed to know more about the cotton markets, we would just bring somebody in from the cotton markets in the US to be able to explain it to them. Whereas now I have to understand it more in depth, understand how the cotton markets impact the US markets, and work with regulators a lot more than different regulators actually, because I worked with a lot of the US or the Asian regulators. But now it's working with the CFTC, and working a lot more with them. And it's been great, a huge amount to learn.
So,
huge amount to learn.
It's quite incredible, because obviously we had your predecessor on this time last year on this show, and we already knew that Tribune was heading up. We didn't know you were coming in to fill his position. And it's such an interesting portfolio. I mean, if you look at, whether you look at the global business, just the ICE US business, and that word just is entirely redundant there, because I mean, the ICE Futures US portfolio is so vast and has such an interesting history of being brought together.
Yeah. So if you look at like the softs contracts, which is a lot of what I focused when I first joined, I love the fact that these started back, some of them started in 1870. Yeah. And, these were like, people were trading on the cotton floor. And I actually, when I was at the NYMEX, I'd gone and visited the NYBOT. So I did get to see the NYBOT floor and see the people trading on it. So it has a huge amount of history. And actually go back to Tom McMahon, his father had traded on the cotton floor as well. So there's a lot of these people in this history that you end up getting involved in, and the personalities in each of these products is very different. So I've met a lot of the guys in the cocoa markets and the sugar markets and the cotton markets, and they're just phenomenal, smart, intelligent people that are so passionate about what they do, and passionate about their products, passionate about the history behind it, passionate about the people that it impacts, and it really brings you into it. And even our product heads are incredibly passionate. And then you look at JC, who runs our Henry Hub and our gas markets. Like the gas markets, and they've been doing so well this first half of the year. Our options markets have been doing well. Our basis markets have been doing well. And just to be part of this growing activity, I think on the Henry Hub side, the liquidity and volume is matching that of March 2014. Right. So so the things are doing very, very well.
Well, I mean, that's a really interesting point, because I mean, one of the reasons I call this cresting the derivatives wave is not because I think that you're peaking, but because, well, I suppose it looks like a really good surf. I mean, you're just riding what has been an ongoing series of fascinating waves. And even last year, I know Tribune was very, very optimistic, and he was talking a lot about how you have a very, very producer-centric, focus in terms of what you do, and user-centric focus. So therefore, you're trying to make sure that while there's speculation, while there's arbitrage, at the same time, everything relates very, very strongly to the end user.
To the end user. It's very much, ICE has not been a retail-focused business. It's always been much more about the commercials who are always using that business, and also the funds and the asset managers, the investment advisors, as opposed to really focusing on retail. And yeah, speculation is always going to be there. And it does help to provide liquidity into the market, no doubt. But we are very focused on making sure that the end user is happy with what they're doing, which is a fantastic part of it, because you get to speak to them.
Right.
You get to understand with them, what do they want, and they feel comfortable enough to come and talk to you.
And it's very interesting, because I think, futures land, so much of it has become so genuinely derivative that people have forgotten about the people who are out there, whether they're digging stuff out of the ground or they're fracking for it or whatever they're trying to do.
And whoever they are,
yes.
If they need these products to help hedge their exposure. And so whether they are digging for oil, whether they're getting the oil, whether they're refining the oil, whether they've gotten the cotton and they've got to sell the cotton to a mill, or whether they're making clothes or they're selling coffee or they're a coffee shop, these are incredibly important parts of it. And actually, the coffee and the cocoa stuff, because we do the grading in the Midtown office, is one of the best parts. I still think it's one of the best parts. I brought my parents to come visit. My kids came to visit. I bring everybody I possibly can to come and see. And we've got coffee roasters in there that the roasting machines itself are there from 1902, I think, all back from. Yeah.
Right. Well, I think that's something that will certainly be very close to my wife's heart, as she's helping produce this evening. She's had a coffee business, and therefore the coffee grading business is just fascinating altogether. I can see that's going to be on her list of things to do when she gets to New York next time.
Yes,
it's quite an intriguing visit, visit altogether. But going back to volume, I mean, actually, it has been a really fantastic year, and it's very, very exciting to see how volumes have almost developed across the board in your portfolio.
Across the board, yeah. So our equity derivatives are doing fantastic. We have also our environmental contracts.
Right.
So that's been doing very, very well. So we have U.S. environmental contracts, Reggies. We have California carbon. We're launching some Washington state ones as well. That's going to be at the end of March. We have some new auctions that are coming up, especially around cook stoves.
Yes.
So that's coming up, and I think they'll be, with the company they're working, I think it's called Uplands, they'll be doing 2 different auctions, about 250,000 carbon credits.
That's right.
Over, I think, twice in a year they'll be running those auctions. We have RECs, renewable energy certificates as well. Those volumes have been up 40% over the year. So it's been doing really well. And renewable energy certificates, it's just basically saying that a megawatt of energy, it comes from a renewable source. Yeah, so that's where it comes
well,
from.
That becomes very interesting. But of course, it's a very interesting mix, because you've got this holistic portfolio, because you're starting with the oil and gas.
Yeah.
You're running all the way through the different ways that can be used and traded and so on. And it's also interesting because there's all sorts of fascinating changes taking place within the benchmarks, for example, for oil.
Yeah, so benchmarks for oil. So on the Brent side, which is our biggest benchmark, I think we spent many, many years talking to people about benchmarks. And I remember when I first joined ICE, my colleague Julius and I would speak to a number of the oil traders in Singapore. They were trading largely WTI.
Right.
And where our big focus was trying to get them to move away, especially in Asian morning, from WTI over to Brent. They kept saying, well, there's liquidity in WTI. Right. It doesn't matter that it is landlocked, it's in the US. There's liquidity and the price is close enough to Brent. So, there's not much basis risk. Liquidity risk is more of an issue. And we did a lot of promotion to the end users, trying to say, ask for Brent, to the point where the banks would come back to us to say, please stop telling people to ask for Brent, because we have to wait until London morning opens up. And then the price between Brent and WTI moved.
Yes.
So I think it moved to $11 for about 3 or 4 weeks. Then the gap closed again. And then it was about 4 or 5 months and it moved. It was $11, $12, $13 price diff. And at that point, everybody started to move to Brent.
Right.
Because they realized that Brent is a global product. WTI, Cushing, it's landlocked. It is not a global price, whereas Brent has always been a global price. They're even now bringing WTI Midland in, which is not different, obviously, than WTI Cushing, because it can be exported, so it's much more relevant to the global marketplace. But having this benchmark, so the need for a benchmark in oil and firms to be able to always look at being able to price from one product is incredibly important for them. So you see it, and they price other products. They used to price natural gas stuff off of that as well, and so still use Brent. And we saw that before a lot on the LNG side, before their term contracts and were gone. People were using Brent to be able to price these products. They weren't necessarily using products like JKM, which we have now on our ICE Futures Europe product.
No, and it's so interesting, as you say, people weren't necessarily using Japan Korea marker, as JKM stands for, just for anybody who's not totally into their oil and gas benchmarks. At the same time, it's fascinating to see how the world, and I think this is partly been driven by electronic trading, has gone from, you know, the 1980s, 90s, even when you would have first been working at, say, NYMEX. I mean, it was a very bilateral world. You had Brent crude and West Texas, which is kind of weird because actually they're both light sweet crudes, which means that they're almost but not quite completely not the oil that everybody else in the rest of the world has. Whether you're in Borneo, Brunei, whether you're in Ukraine or Russia or whatever. I mean, all of the different major fields around the world. So, I mean, how do you go about continuing to balance between the multi-benchmark world that we're going into and making sure you don't go too far too fast?
No, and that's a fair comment, because when you look at the oil markets, people will choose their benchmark in some way. So Dubai continues to be a benchmark that a lot of people are trading, but we also have ICE Futures Abu Dhabi, which we have brought in. They are in to try to move from just having to have more Middle Eastern crudes available for people, and to try to establish those different benchmarks. And even they'll be looking at new contracts and developing new benchmarks. And it's trying to, and I think you're right, benchmarks can be one for global, and you look at Brent, but also they can be very regional as well. So, and I think you have to have that, and you're never going to have one product that's going to fit for everybody, but also you have to be careful by not having too many products, because then you're running out of liquidity. Right. So if you have too much, then if you have too many different products, people can't really choose what they're going to do. And it's not even choice. I guess one might go here, one might go there, and then you just don't have enough liquidity. And if you don't have liquidity, people aren't going to trade, and then they're going to fall to one product anyway. So which is where we end up getting this from.
So it's very interesting. It's interesting you mentioned ICE Futures Abu Dhabi, because that's obviously been, I know it's not quite within your US, but in Merban, that whole island of excellence that's emerged around the Abu Dhabi global market, where you set the exchange up, and we were talking about ICE execution. I mean, 504 days to build an exchange during COVID. I think that's got to be some sort of a world record, which is quite fascinating. So, you know, coming back though to, I mean, obviously your core focus is in the US market business. How do you see the US markets you're looking at developing? Because obviously the US is an epicenter, not just because it's the biggest developed economy in the world, but foreigners trade. I mean, from all over. I don't just mean Canadians like your good selves, but people from even further afield.
So we have people trading from all over the world, from China through to Australia, through India. I was in Dubai at a sugar conference, and it's amazing how many different nationalities are there, and everybody trading our sugar contracts from all over the world. So it's making sure that it's a product and an exchange that works for everyone and accessible to everybody. So, and for most of them, it's going through clearing members and making sure we work closely with the clearing members so that they have the information to be able to go to every client, to be able to give the information that the clients need. And then we get the information either from the clearing members or the clients themselves, and adjust the products as if we need to. So on our softs, we have committees. We have a cocoa committee, sugar committee, cotton committee, where they go and they get some information from the committee members. We have that in canola as well. And there was sort of some changes we've made in the canola markets because information that came back from the committee. And they said, this is what we need to change. Can you look at it? So it's a back and forth dialogue with everybody to make sure it works well. And when we look at our coffee committee, we have people represented not just from the US, but from all over the world.
But actually, that's a very interesting pointer, because canola, am I right in thinking that canola is actually still part of the Winnipeg exchange that you acquired many years ago? Is that right?
So now it's on ICUS,
It's
so
ICUS.
Moved it over to ICUS, but yes.
Okay. So you've got some Canadian products and other
We do have a little bit of Canadian. And
Interesting.
We do have a few Canadians who work for ICUS.
Just around and about, in a manner of speaking. Well, it's fascinating because your portfolio is so diverse across the different markets of commodities, but at the same time, there are some things that you don't do currently, for example, precious metals effectively not involved.
Yeah, so no precious metal. Well, we had a gold contract. We delisted that at the end of last year. I think there's, like, you look at every exchange, some products we focus on that we do better on, and some products we don't. And I think it's like anything, you have to sort of see what works, where you do very well, and then start to focus your efforts on that.
The way I always like to describe it is, I mean, the larger exchanges are all effectively like department stores. I mean, no two department stores are identical.
Yeah.
When you're inside a department store, you know
Fair
you're in a
enough.
department store without any difficulty. You may not be able to understand anything, even if you're in the middle of, I don't know, Japan or somewhere. But at the same time, you have different ranges of products. So therefore, I mean, where do you think the major areas of opportunity are for you at the moment?
Yeah, I think it's expanding in our environmental market, and some of our rates. We have a mortgage rate lock futures contracts, which we launched about a year ago now. So still continue to promote that. I think with interest rates being high, probably not the best time where we've launched this contract. But over time, I think as we start to see a little bit more, not even easing off, I guess, less volatility in those markets, and then we'll be able to work with a lot more with the market to be able to work to develop that.
And it's fascinating, actually, when you're just touching on interest rates. Obviously, that's not a huge business for you in the US, but I mean, for ICE overall, it's been a fantastic year with the yield curve finally reappearing from the dead.
Exactly. I remember when I was younger, my parents always talking about inflation. And it's like inflation we talked about earlier. Like it's, there is interest rates up there.
Yeah, it's incredible. You look at the current generation who think that 6% interest rates are a calamity, whereas I historically think that they're incredibly low.
But well, 6% still seems like a lot because we sort of were living sort of 1-2% for so long.
Absolutely.
Yeah, and to the point where I think there is. You have generations, like a generation that doesn't remember anything but 1-2%, and nobody ever speaking about it.
Yes.
It's been so long.
It's been an incredible thing.
And moved very quickly.
Oh, absolutely.
So
I mean, it's incredible.
Slow. When it moves incredibly fast.
Well, we had this mythical beast, the yield curve, that was still in economics textbooks, but everybody thought it was something like the Loch Ness Monster. It was never going to be seen again. And suddenly it has appeared, and people are going, where did that come from?
I'm sure university professors are enjoying
I'm sure sales of like Bagfisher and all of those sorts of economic textbooks have gone through the roof just as people are excited by the rebirth of the yield curve. You touched on it earlier as we jump around, I mean, through your fascinating portfolio, but it has been incredible to watch the ongoing story of equity options growth, particularly in the single name equity business in the course of the last decade. Indeed.
Yeah, there's been a lot. And then we've done very well in our MSCI equity derivatives markets. Our EM is, I think, the second or third largest contract in equity derivatives. And the team that promotes that has done a huge amount of work, a lot of focus on ESG as well. So we're working very much about promoting our ESG products and climate-focused products around all MSCI-derived ones. And that we're starting to see more and more volume. I think there's ones that are aligned to the Paris-aligned contracts. Those out of Europe are starting to see more interest solely, but we're starting to see more volume start to grow.
Okay. So that's interesting, though, because actually you hit on something. I mean, I started by asking the question about the single name equity option business, which has seen a lot of growth. But how do you approach, I mean, obviously by the time ICE got into the equity index business, a lot of the prime dance cards had already been marked. I mean, the Dow Jones, the S&P business, that had already gone to other people and effectively earned perpetual licenses. How do you go about competing with that through things like your MSCI products?
No, that's an interesting point. I think when you're starting, you have to still find differences. So with the Dow Jones, the S&P, those ones are much more standard, broad-based indices, where that's why we start to look at those ones like having the ESG or the Paris-aligned contracts and say, what else are asset managers? What are money managers? What are they looking for? What are they looking at exposure? And that's when we sit down with MSCI and discuss with them what other indices that they have that we could potentially use, that we could potentially develop with them, and then look to market. And the team who does it is phenomenal about talking to different asset managers, different money managers, trying to understand what they need, what the funds need, and trying to anticipate what they expect to have, so we can get that out there for them.
And I think that is a very interesting point, because the growth in indexation and the growth of the indexed futures and options business, it seems to me that it's just never going to stop.
No, I know there's huge. I can't see it stopping either, and we still get constant demand for it, and still constant interest from everywhere, from Hong Kong all the way through London into the US. And this is again where we get this vast variety of people coming in to these markets. So we have MSCI Japanese-based contracts that we have a lot of demand for as well. We've got and more questions. I know our colleagues out in Asia are getting more demand for that, more interest on that. So yeah, it's definitely been a good growth story for us.
And what about things like the US marketplace in terms of opening hours? Do you see yourselves continuing to expand, or do you think that it's necessary to really focus liquidity into certain periods of the day?
No, I think we're mostly 22 hours for most contracts, except for some of our softs contracts. And I don't see us changing. We do every once in a while go back and look at, do we shorten the softs, some of the contracts, because there is demand from some players. I mean, we've had everything, to be honest, from when we tried to lengthen cotton hours. This would have been actually well before I took over the exchange, would have been 7, 8, 9 years ago, because we were seeing more interest from China. So we wanted to expand it to cover the Chinese market. We ended up shortening it again, mostly because we found people out of Europe were struggling to be able to participate in those markets as much. And to be honest, we were not getting the demand from China in that early time as we wanted. And you know what? I think it's like anything. It's not always a build it and they will come. It's still, you have to get that liquidity in there. And I don't think that when we were speaking to those in Asia, whether it was China or Singapore or elsewhere, they were willing to provide as much liquidity as they either indicated or they had already hoped to see. I think they also felt if they just opened it, someone would provide liquidity somewhere, and we weren't getting that. So we ended up shortening them again. But we try. This is like anything. You try. If it doesn't work, then you can change.
But it's very difficult, though. I mean, when you're looking at things like that in Asia, because obviously somewhere like Singapore, that's great, because that's an open economy. They've got complete currency fungibility, or complete currency convertibility, rather. But when you're dealing with China, it can be very difficult, because it's an incredibly locally focused marketplace, even more so than, say, the United States of America is to its domestic market.
It is. And I think what we've always had to learn as salespeople is trying to read what the client wants. So does the client really want to participate, or is the client just looking for liquidity? Not even liquidity. Are they looking for price transparency? Because as an exchange, we provide price transparency. And I think they say, well, if you opened up during Asia hours, they just have the ability to price. They might not actually want to trade. They're just like, there's a price. But it's not, we can't just pay people to come and provide a price at a time that they want to see.
No, and at the same time,
and the price transfer has to come from, in the stock market, it often has to come from the commercials, have to be part of that.
And
to understand
also,
what the price is.
If you're sitting there having a price made, but you're not actually trading anything, you're not making $1 out of your business. So therefore, it's fundamentally not in your interest to go there, just to be able to do it, because you're really just feeding business for other exchanges. So some markets tend to be shorter. Some are still 22 plus hours. So all of our oil, all of the gas markets, they're 22 hours. Our environmental contracts, our I think sugar's still 22 hours, and all of our MSCI. What about, so they're 23 hours, but what about single name equity options? Because in the US, they're really opened on a very restricted day. Am I not correct in that? They're still open for basically about 8 hours a day?
I think you're right about that,
So I'm just curious, because I mean, SIBO have been moving this idea that they're going to try and do a rolling kind of global single name equity. The reason I'm interested in this is not because particularly just the US angle. It's the fascinating problem, which actually I've discussed now several times in recent weeks, and I've used the same example each time, which is race in the USA, Ferrari. So Ferrari, a brand that I think everybody's going to manage to readily identify with, even though I do believe that even most of the viewers of this live stream do not actually own Ferraris. The fascinating concept there is, during the course of Borsa Italiana's trading day, Ferrari options are dead all morning, and it's only in the afternoon when we hear the opening bell on Wall Street, and suddenly your colleagues at NYSE do their thing, and the equity market, the equity options market comes in, and suddenly you've got liquidity, and you can trade race options, dual listed in NYSE and in Italy, and suddenly the market with the individual name options comes alive, and it's way more liquid. You can trade there, which is kind of bizarre because it's its secondary point of listing. And I'm just curious as to whether or not there's a way to try and extend single name equity liquidity, because actually, frankly, the European marketplace is still lagging behind, despite huge advances, what we see in that concentrated 6 or 7 hour window of the US trading day.
Yeah, so I think this is a discussion we sometimes had when we were discussing products to list in Singapore as well.
Okay.
And if we were looking at products that were more US focused, how to get people to come in, and how to get people to come in and start looking and driving volume. And none of it was ever easy.
Right.
Because you often have, if you're looking at, and maybe Europe's the same, but if you're looking at what's happening in Singapore, a lot of the prop firms that we would potentially talk to about help us to provide liquidity in the first early stages of the market, they were not necessarily comfortable with providing liquidity in a market where the underlying equity was not open.
Okay.
Right. So they didn't want to be able to, they don't want to be able to hold that risk.
Yeah.
If it's not suitably liquid and they can't find a place to offload that risk and they're going to hold on to the risk, they're not comfortable in doing that.
Understandable.
And also, I think a lot of the prop firms in Asia are focused on Asian exchanges,
right,
and understanding what's happening in the Asian market. So even when we would see a global prop firm, it always seemed that when they had the Asian arm, which makes sense, it focused on the Asian exchanges. So you weren't having somebody in New York focusing on one of the Asian different exchanges.
Whatever
which makes sense.
Is.
So I think that could be part of what you're seeing. And maybe when we're looking at what's happening in New York and you say, it could just be demand, interest, people. America's big. Like when it comes down to it, it is just big. And there's lots of asset managers, there's lots of investment funds, there's a lot of funds that sit there and want to be able to get exposure to that.
Oh, absolutely.
And when you have that, and I think there is sometimes something to be said about having a shorter time frame. People going in. And that is an argument we have people make about some of our contracts as well. But it's quite hard because we do know that there are people in Asia that want to continue to trade.
Yes.
So even our cotton markets say open basically on Sunday evening US time.
Right.
And some people don't always like that because they feel that they have to work on Sunday evening and there's not always enough liquidity in that time frame. But we still have people globally trading and pricing in that market. And you do, and this is again, we provide price transparency. So it's a fine balance in playing around with it, and none of it's ever going to be perfect. So we see.
Well, it's very interesting. I'm offering myself a wry smile there, and it's not because of something you're saying, Jennifer, as we're discussing this whole concept of ICE continuing to ride the crest of the wave of derivatives. But actually, the reason I'm smiling is because you're talking about opening up things like cotton futures on a Sunday evening and going through, and I'm sitting thinking, gosh, do you think that Jeff Sprecher got his money back from paying that, whatever it was, $280 million for the NIBOT? And at the time, everybody was like, is he insane paying this amount of money? But the truth of it was, I mean, he got a clearinghouse, he got an exchange, and it allowed you to clear MSCI derivatives.
Yes,
All these other things.
And great people that came along with that as well.
Absolutely.
Some great people, because I think
not just Tom, and I mean other people who really, I mean, went on to run NYSE, but all the people who were underneath it stayed in that whole product area. And the grading business.
Yeah, and we've got some, and on the NIBOT side, we've got some fantastic people who have still been at ICE. Tim Berry, who works under me, he is like a wealth of knowledge. Audrey on our legal side, we've gotten some very, very good people that are phenomenal people who are with us.
An incredible history, as you say, contracts trading back to 1870. So that's the last time the French were having a revolution. And they haven't had one of those for a while. Who knows, they might have another one again. But anyway, that's not the topic of discussion today.
But you think of all the things that those contracts have been through.
Totally.
That we haven't seen in anything else. They've been through, multiple stock market crashes, 1929 crash, like all these things that we read about, they've been through all that.
The contracts were highly mature and 3 decades old at the point in time of the 1907 stock market meltdown, and the different times when JP Morgan actually arrived on the floor and tried to manage to resurrect the US stock market. One thing we haven't touched upon, though, is, I mean, market access. You've talked a lot about, obviously, the facilitation of clearing members and how they get there and so on. I'm just interested, how is the world looking in your product set these days between ultra low latency, the high frequency traders, and the rest, those of us who enter via not even necessarily T1 lines, but the good old internet in order to trade?
We still have a variety of players in there. You do always have the fast proprietary trading firms who are always going to be and provide a significant amount of liquidity.
Right.
They are there because I think what people forget, because we often have firms or players that come in, especially when cotton prices move up and down a little, things get a little bit more volatile, and cotton can be very political.
Right.
Because it can be very, very American, and it's a very American product that people feel very strongly for, and it can impact, if you're looking at what happens in these different states, it can impact the end user significantly. If the price goes up, if the price goes down, then they start talking to Congress. It always gets up into Washington, so there's a lot of questions. We will often break that down and try to understand how much liquidity is there. And what basically happens, if you only have commercials in there, you don't have enough people on both sides of the market.
Right.
So the speculators, whether they're ultra high frequency speculators or not, they provide bids and asks on both of those sides of those markets. And if you don't have it, you're just getting one side of the market in, and things become more expensive. The bid and ask starts to get wider. And people sort of think you don't want to have them in, but you need to have them in to have good prices, to have both bid and offers, and to have it over almost the whole entire day. Because if not, you're all of a sudden making things exceptionally expensive for the end users, much more than people have realized. So we break down these numbers, look at the Commitment of Traders report, which everybody can get, and understand exactly how that happens.
No, it's fascinating altogether. In fact, I remember David Pennicott when he was running ICE Futures Europe. I mean, good grief, this must be 10 or 11 years ago, noting the fact that actually the majority of signups to the ICE exchange was still through your standard web browser, WebICE, even 10, 12 years ago.
Yeah, especially on our energy. There's a huge amount that's done. So it's a colleague of mine, and he talked about this at the Dubai Sugar Conference. We expect to see more firms that are commercials using algorithms to be able to trade.
Right.
Because for them, it's a different way of doing execution. We're seeing the move for even a lot of financial institutions where they're moving away from just having everybody just trading manually anymore, and they're having algos come in. And we're going to start seeing that with commercials, partly because they can almost buy a white label system on their own and use that. And they'll start pricing that and realize this is how much, if I don't call a broker, if I do that, this is how much it's going to cost if I just put this in versus if I'm calling a broker.
Right.
And brokers will always provide market color and different information, but sometimes just being able to put those trades in, having an algorithm do that on your behalf, can make it incredibly fast, easy, and very inexpensive.
And also they can mine that data without too much difficulty these days.
Yeah, and they can see exactly, they'll be able to price that immediately, these commercial firms, and understand where is the price, and they'll start to see that it becomes much cheaper to use an algorithm than it always is going to have somebody manually putting it in, or to always go to a broker and have a broker put it in. So I think we'll start to see a lot more diversity of that come out.
That's very interesting, because actually that should in itself ultimately enhance liquidity. It's certainly going to change the face of it, but it's going to enhance liquidity, because it's going to allow the commercials to be effectively better able to access than they used to be from what was the case of the previous situation where they were obviously using brokers more intently and so on. And that's fascinating, because therefore it really sounds to me like you've just got the most incredible world of opportunity in front of you, Jennifer.
Yeah, no, I think bringing these commercials for them to start understanding that, and this is going to take time. This is not something that is going to take in the next 3 months. It's sort of the next 4 to 5 years, because when we talk to some of the commercials in Dubai, this wasn't even on their radar.
Yeah.
Right. So it'll get on their radar. They'll start looking at it. More firms are going to be bringing into this technology. We'll be working with firms to bring into this technology, and you're going to start to have more and more algorithm and this type of trading happening. from different market players than we saw before.
And you've got the patience to do that because you're going to retire with ICE, right?
Of course, I've got a long time.
So you've got all the time in the world, as James Bond would have said, yes, and I've managed to make it there. Yeah, that's good.
They're going to have to roll me out of there, I tell you.
Well, the good thing about ICE is that I haven't yet seen any evidence that you particularly have an obligatory retirement age. I mean,
There
it seems
hasn't
to be,
been,
no.
it doesn't seem to be.
It's quite happy with anybody working for a long, so you've got a long time to go.
They're quite happy.
Yeah,
they
that's
happy.
quite
There's
marvelous
no
altogether.
issue. Yeah.
So that's really interesting because you're talking about this sort of whole technological data layer, which obviously must please your colleagues in ICE data services and so on as well, that's going to be changing the market and the whole fabric of the market, which is a huge opportunity. And I suppose really, well, that does lead me, I think it's a perfect time to ask, the question I always ask. I mean, where do you think the capital market revolution goes next?
Yeah, so I was prepped for this question, just for it. But the one thing when I looked at it and when I thought about it, it still kept coming back to the environmental markets.
Okay.
It feels to me that the environmental markets and the growth that we're going to see in different products, whether it's like the auctions that we do or different carbon credits, carbon allowances, all this change that's going to happen, it's going to be unique and different. It's almost, sometimes it feels to me in these markets, people have a little bit of FOMO.
Okay.
Right. They're trying to figure out where is this going. They're almost trying to get ahead of it. There seems to be so much excitement about it that is trying to harness that excitement, figure out what products are going to be, and to try to develop all these new areas. And I think that is probably over the next sort of 5 to 7 years, that's where we're going to see a huge amount of change. And it's going to be really exciting because everybody wants to, and firms, and because I guess in the environmental markets it's interesting because we're not just looking at commercials or financial institutions. We're looking at everybody.
Right.
So you're looking at everybody all the way from my salad shop in New York. They have carbon neutral salads now. So, and I remember meeting someone, a friend in Singapore, and he provides soybean milk and he buys carbon credits so that he can sell carbon neutral soy milk.
Wow.
And so he goes all the way along the whole, the chain,
right.
so that the whole value chain to be able to figure out how he can make this as environmentally friendly as possible. So it's everyone from him all the way to commercials, all the way to financial institutions, all the way to exchanges that have to look at how can we meet our commitment. So we've got to find products, and exchanges have to find products to allow people to meet these commitments and then manage the price risk around it. So it's going to be a really interesting area. So I think Gordon Bennett, who runs it, he's got a big job ahead of him.
Well, Gordon Bennett, another of course IPO-VID alumnus,
well.
which is he has been a fabulous guest previously on this show. I have to say, I'm coming to the end of the show, and Jennifer Ilkiw, I've got FOMO. I've got fear of missing out. I think over the excitement of what's going on, whether it's the technological strategy underpinning much of what's going to change in the commodity world, the ongoing growth across your product set. It's really, really thrilling. The great news is that you're not going to be leaving anytime in the near future, and you intend to retire with ICE. So that means that I'm looking forward to seeing you again in the near future. Yes, I think we'll get several in before you retire without any difficulty whatsoever, Jennifer. It's been a really, really interesting show. As we can see, I think we can safely say Intercontinental Exchange are continuing to safely ride that crest of the derivatives wave. Let's check in again with Jennifer at some stage in the near future. It's been an absolute joy in this show. Thank you very much to our production team, to Beata this evening for organizing everything, and Racing Mendoza, our indefatigable producer. And of course, ladies and gentlemen, if you've got FOMO about the exchange industry, you need to be reading Exchange Invest. Another Bit Carnage is going to be coming up tomorrow, as ever, as we discuss the, interesting compartmentalization and decombustion of crypto version 1.0. But at the same time, remember, the water cooler of the bourse business is Exchange Invest. Now, on that note, ladies and gentlemen, my name is Patrick L. Young. I'm going to say good day to you from this fabulous recorded show, and we're going to get downstairs to the cocktails and start mixing and meeting the world's most important exchange personnel alongside our illustrious guest today, the head of ICE Futures US, Jennifer Ilkiw. My name is Patrick L. Young. I look forward to seeing you next week. We're going to be talking numismatism. This has been IPO-VID 98. Thank you very much, and have a great week in blockchain, life, derivatives, and of course,